Hi, it's Gary. Purpose of this video blog is to provide timely and relevant information efficiently. It does not replace the importance of regular communication, face-to-face meetings or phone calls. It's merely an additional form of communication. What I'd like to do here is take the next 3 or 4 minutes and basically share my perspective on what's going on in the financial marketplace. I'm not providing financial information here, but if you have any specific questions, please feel free to call me, email me, or of course set up a meeting. So what is going on? Basically what's gone on the last 6 months since June is stock markets have been beaten down to what we consider unreasonable levels. Canadian market is down roughly 45% in that area. US markets similar, global markets in the 40 to 60 plus range. What caused the crisis? A lot of it was caused mainly by the credit crisis in the US and of course high oil prices in Canada as well. And in my opinion and others, stock markets really shouldn't be at the levels they're at right now. We've been very disappointed in the media. They've created a lot of fear and panic out there, which we don't like to see in times like this. Where do we think we're going from here, or where are we now? We are basically in a recession in Canada. Globally, we are in a global recession. Credit crisis is still here. And of course we've seen lack of confidence by the public right now, as well as in Canada we've seen the political instability created by the minority conservative government. So some reasons to be optimistic, and why we're quite optimistic on a go-forward basis. We do have lower oil prices right now. Interest rates in Canada are low and continuing to drop. We're seeing governments, for one of the few times the G20 met last month, trying to look at how these governments working together can try to improve their local economies and of course the global economy. Barack Obama coming into the US was very positive and has surrounded himself with some very, very intelligent people. We consider that extremely positive. The US is revamping their financial system, and I think we'll see the benefits of that as early as next year. Now, things basically, when we look at it, could get worse before they get better, although we think we're pretty well near the bottom if we're not already there. It's probably going to take 12 to 18 months for things to really get sorted out in the US. So we're expecting slow growth over that time period. On a little longer period, once we get through that and we see some confidence return, we're very optimistic that over the next 2 to 5 years we should see some very, very good growth periods. Short-term needs for clients, we've been using GICs, short-term money market funds, and so on. We expect oil prices to go up and the Canadian dollar to go up in the next 12 months, which would be very positive for Canada, as both of those are undervalued right now. We really see not a lot of common sense out there right now in the marketplace. We're advising clients to continue to maintain their investment strategy because we know when the market moves, we definitely want to be there. So other things we're basically I just want to talk to you about right now is the fact that everyone's portfolio was basically put together based on their risk tolerance. And if your risk tolerance has changed, then you should get in touch with us. Otherwise, then we know you hold quality companies in your portfolio as well as good bond holdings. So in closing, I know it's been a difficult time. I feel we must be patient and we will be rewarded. We know the markets will go up, we just don't know when. I want to, on behalf of Darlene and Lori, wish you a very Merry Christmas, safe and happy New Year, and once again, thank you for your patience, confidence, and trust. Bye for now.